When was the last time you spoke to your accountant before tax season? If the answer is never, your business might already be losing money. I'm Daniel Sabet, CFO at Green Growth CPAs, and I've worked with over 200 cannabis operators across 12 states. The biggest predictor of whether a business optimizes taxes, avoids compliance issues, and scales profitability isn't revenue or market, it's communication with their accountant. Operators who meet quarterly save $35,000 to $75,000 per year in avoidable costs. Operators who only reach out in March, they leave 5 and 6 figures on the table every year. Let me show you exactly how. First, the $53,500 mistake. A single location dispensary in New Jersey that's doing $3.2 million in revenue only spoke to their accountant once per year, and that's during tax season. They sent over 12 months of records in March, filed in April or later, and had zero communication the rest of the year. That one decision cost them over 50 grand. They bought $65,000 in equipment mid-year, but never discussed timing or tax strategy beforehand. As a result, they missed optimal Section 179 treatment and paid about $18,000 more in taxes than necessary. At the same time, their inventory was recorded incorrectly at retail value instead of cost. Under 280E, cost of goods sold is the primary deduction, so this error directly increased their tax bill. Because it wasn't caught until tax season, it couldn't be fully corrected in time, costing another $12,000. Then came the penalties. Because they waited until March to engage, their accountant didn't have enough time to clean everything up. They filed late and incurred about $8,500 in penalties and interest. But the biggest issue was cash flow. With no proactive planning, they missed quarterly tax estimates and were hit with a $420,000 tax bill in April, with only $180,000 in the bank. They had to delay vendor payments, pull from personal savings, and cancel expansion plans. The total damage exceeded $50,000, and that cycle would have repeated every year. Then they changed one thing: communication. They moved to quarterly check-ins, January, April, July, and October. Within 1 year, everything changed. They timed equipment purchases correctly, saving over $20,000. They fixed inventory issues mid-year. They filed on time with zero penalties. Their cash flow stabilized. And they opened a second location that generated $240,000 in additional revenue. They went from losing $50,000 to gaining $75,000 by just talking to their accountant 4 times a year. Now let's look at a different risk: compliance. A mid-sized Michigan cultivator with over 15,000 square foot canopy ran into a serious issue, not because of fraud, but because of poor communication. Their accounting records didn't match their metric data. For 18 months, no one reconciled the two systems. The compliance team, bookkeeper, and accountant were all working in silos. When regulators audited them, they found major discrepancies, inventory mismatches, missing waste records, and inconsistent reporting. The result was a $25,000 fine, a 60-day corrective action plan, and the threat of license suspension. The root cause wasn't complexity, it was just lack of communication. If they had regular check-ins, this would have been caught early. Instead, we implemented a simple monthly reconciliation process where compliance, accounting, and leadership reviewed Metrc against financials together. Within months, discrepancies dropped to minimal levels, compliance risk was eliminated, and audits returned to normal frequency. In cannabis, accounting communication is compliance communication. You can't separate the two. Now let's look at what rate communication actually looks like. One of our multi-state clients operates dispensaries across California, Michigan, and New Jersey with about $18 million in revenue. They don't just check in with their accountant, they run quarterly strategy meetings. Each quarter has a purpose. In quarter 1, they focus on annual planning, tax strategy, entity structure, and capital allocation. In quarter 2, they evaluate expansion opportunities and run financial models before making decisions. In quarter 3, they review performance and optimize cost structure, especially cost of goods sold under 280E. And in quarter 4, they finalize year-end planning to minimize taxes and prepare for the next year. This structure drives real results. Through better cost allocation, they increase cost of goods sold and reduce taxable income, saving about $90,000 per year. By restructuring entities across states, they reduce administrative costs by roughly $25,000 annually. During one expansion decision, they avoided entering a low-return market and instead opened a second location in an existing state, generating $880,000 in gross profit in the first year. And through mid-year financial reviews, they caught a dangerous trend, operating expenses rising faster than revenue. By pausing hiring and focusing on efficiency, they avoided a potential $400,000 cash flow issue. Over 18 months, these decisions created more than $1.2 million in value, all from structured, consistent communication. So what does this look like in practice? There are 5 types of communication every cannabis operator should have. Quarterly tax planning to manage estimates, purchases, and structure. Monthly reconciliation to ensure compliance and accurate reporting. Quarterly reviews to track performance and margins. Strategic planning sessions to guide expansion and major decisions. And ad hoc conversations before any major financial move. The cost of this is relatively small, around $15,000 to $20,000 per year. The cost of not doing it, $50,000 to $150,000 in avoidable losses plus the missed upside. Here's what to do this week. Schedule for your next 4 quarterly meetings right now and make them recurring. Email your accountant today and set up a 60-minute strategy call. Send over your current financials, P&Ls, balance sheet, and cash flow statements. Write down your top 3 financial questions and use those to guide the conversation. Then, set up a monthly reconciliation process and create a simple system to track action items so nothing falls through the cracks. The New Jersey dispensary that only talked to their accountant in March lost $53,500 in 1 year. The multi-state operator that met quarterly generated over $1.2 million in value. The difference wasn't size, it wasn't sophistication, it was just simply communication. 4 one-hour conversations per year can save you $50,000 to $150,000 in avoidable costs and generate another $50,000 to $200,000 in upside. That's $100,000 to $350,000 in value from just a few hours of conversation. When was the last time you talked to your accountant? If the answer is not since last tax season, you're already losing money. Fix that this week. Link to schedule a consultation in the description. I'm Daniel Sabet. Thank you for watching and stay sharp.